Welcome to this week's look at the state of the New York City real estate market. This is for the week of April 15th to the 21st. Wow, April is really flying by. Okay, we're going to get started as we always do with the luxury market, then take a look at the Manhattan and the Brooklyn markets, and I'm going to wrap it up, give you my thoughts and my recommendations. If you're an active buyer or seller in this market, you're definitely going to want to stick around for that. As always, if you have any questions at all, please post them below, or you can always reach out to me directly at Sotheby's. There were 28 contracts signed in the luxury market. That is 10 more than the previous week, and 6 of those were in the trophy category. The number one contract was 2 East 67th Street. It was asking $44.5 million. It has been on and off the market since May of 2022. It was starting as high as $49 million. It is the most expensive co-op to sell in Manhattan in 22 months. This is a full floor co-op. It has 4 bedrooms and 5.5 bathrooms. Living room, library, formal dining rooms span 60 feet overlooking Central Park. Just in case you're curious, this unit was purchased for $26 million back in April of 2007, and then it was renovated. Amenities in the building include doorman, gym, storage, and wine cellar storage. The number 2 contract was West 34B at 500 West 18th Street. It was asking $25,600,000. The unit has 5,121 square feet. It includes 4 bedrooms and 4.5 bathrooms. It has a 51 by 30 foot great room overlooking the Hudson River, and that is flanked by 2 loggias totaling 459 square feet. This unit is in the condo building known as One Highline, and amenities in this building include a fitness center, a 75-foot lap pool, spa treatment rooms, golf simulator, children's playroom, private dining, games lounge, and a garage. As you might recall, the services are offered in the adjacent Faena Hotel, which is part of the project. If we take a look at the quick stats from last week, the total weekly asking price sales volume, 263,670,000. Average asking price, 9,416,786. Median asking price, just under 6 million, 5,997,500. Average discount from original ask to last asking price, 4%. Average days on market, 736. Any questions about the luxury market, you can post those questions below, or you can reach out to me directly at Sotheby's. We're going to take a look now at what happened in Manhattan. This market is changing a lot, so you're definitely going to want to stick around till the end of this report when I wrap it all up and give you my recommendations. The 1 week supply for last week, 439, that is down almost 7%. Contract signed, 223, up almost 3%. And off-market properties rose over 47%, 159. The 1 month supply, 1,871, down almost 3%. Contract signed 954, also down almost 6%. And the off-market properties up almost 24%, 551. This market pulse remains in this neutral position. It is up 1% from last year, basically a wash from last month. You can see the liquidity pace chart. This 30-day moving window of contract activity is down at 954. We had broken 1,000, but I'll get into that more as we're seeing this shift in the market. We are, down about 6.2% from last month, 3.2% from last year. It's an interesting chart regarding recent price cuts. The depth of price cuts is slightly less than last year, with 37% of sellers needing at least one price cut, that is, to get a deal done, suggesting a price-sensitive market. Okay, that is it for Manhattan. I'll get into what this all means at the end of this report. We're going to take a look now at what happened in Brooklyn. Any questions? Post them below, or you can always reach out to me at Sotheby's. The weekly supply for Brooklyn is showing 208 properties came on the market, down about 18% for the week. Contract signed 152. That's up almost 18%. And the off-market properties also rose about 35%, 62 off-market properties for the week. For the month, 942. That is a change of about a little over 1%. Contracts signed 581 for the month, down 4%. Off-market properties 232, up 10%. Again, just as with Manhattan, we see that Brooklyn is in this neutral state, down less than 1% from last month and down a little over, just barely over 1% from last year. If we look at the liquidity pace chart for Brooklyn, this 30-day moving window is showing us 581. That is down almost 4% from last month, down a little over 11% from last year. Recent price cuts for Brooklyn. The depth of price cuts in Brooklyn is less than last year, with 29% of sellers needing at least one price cut to get a deal done, also suggesting a price-sensitive market. Okay, that is it for Brooklyn. I'm going to sum it up now, give you my thoughts about what is going on here. What is going on here in the New York City market? Well, we have seen some changes, and I'm going to get into that in just a minute. Any questions at all, please post them below, or you can always reach out to me directly at Sotheby's. So the luxury market continues to dominate. This is a tale of two markets, no question. The luxury market is marching right along, with some weeks a little bit lower than others, but for the most part, seemingly unaffected by the rise in interest rates that we're seeing, that is causing a bit of a pumping of the brakes of buyers at lower price points, but we'll get into that. So 28 contracts signed last week for properties priced at $4 million and above, 6 of those priced at $10 million and above. That is 10 more than the previous week, and 21 of those were condos, 5 were co-ops, 1 was a condop, and 1 was a townhouse. 14 were uptown and 14 were downtown. Why would the luxury market be doing better, you might ask, than the rest of the market? Well, as you might recall, I've said that 60 to 70% of the luxury market deals are cash, and so that's probably good reason. Big part of it right there. But let's get into the Manhattan and Brooklyn markets, and then I'll sum it up. The conditions in both Manhattan and Brooklyn are essentially neutral. The supply in Manhattan, 441 for the week, down almost 5%. Still, we are nearing 7,000 for total inventory in Manhattan. Expect probably by mid-June, we should be at about 7,500. That isn't amazing, but it's not terrible either. Definitely giving buyers some choices. In Brooklyn, down 18%, 208. The inventory in Brooklyn is low at 3,145. We may be nearing the peak of inventory in Brooklyn. Definitely seeing a slowdown there. If we look at the contracts signed for both Manhattan and Brooklyn, we saw that Manhattan was up a little bit, 2.8%, 223 contracts, just up a little bit. Brooklyn up significantly more, almost 18% at 152. If we look at the price action, we see that definitely price-sensitive market, 37% Manhattan owners need to at least one price cut, with an average reduction of 7.7%. Brooklyn, 29% of those sellers required price cuts, with an average reduction of 6.1%. What it's telling us is both of those markets are kind of price sensitive. So what does this mean? Well, if you're a seller, you definitely want to be careful. If you're pricing, you want to be sure that your asking price is not too ambitious. And if you need to make an adjustment, be sure that you do it early if you need to do it. We are in April. We are April 22nd, so you don't want to wait too long. The market has definitely improved from a few months ago, but it remains less active than the typical spring market. So we have definitely seen a bit of a pullback from February. March saw a bit of a slowdown. We aren't quite sure where we are yet for April, but it does seem like it's a little pokey out there. Your pricing strategy, if you're a seller, is really crucial. as I said, especially with the mortgage rates continuing to impact affordability for the buyers, depending on your price point, of course, but you can see the luxury market above 4 million, 4 million and above, really doing fairly well. Everything below is more impacted. Buyers, what does this mean for you? We are in a neutral market. The Manhattan inventory is slowly rising. The Brooklyn inventory is low. You won't have as much choice there. Contract activity, you can see, is up. It is a bit constrained. You may have some competition depending on how long the property's been on the market, how well priced it is, how essentially it's what the demand is for this property. So if you're a buyer, make sure you have your ducks in a row. If you're a seller and you're not getting the activity you want, make your price adjustment and do it sooner rather than later so you don't miss the activity of this market. Okay, that is it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.